Today we are examining one of the most thought-provoking discussions surrounding Iraq's financial future, a topic that goes beyond daily exchange rates and reaches into the very foundation of the country's monetary system. The article titled "The Dollar's Journey from Manhattan to Al-Rashid," a reading into the secrets of monetary dependence and the future of Iraq too, raises an important sovereign question that has been debated by economists, policymakers, financial analysts, and Iraqi citizens for years. If Iraq is one of the world's richest countries in terms of natural resources and possesses the fourth largest proven oil reserves, why are significant portions of its foreign currency reserves connected to financial institutions outside the country, particularly the Federal Reserve Bank of New York? More importantly, what does this arrangement actually mean for Iraq's economy, its banking sector, and the long-term outlook for the Iraqi dinar? These are complex questions that deserve careful analysis rather than emotional reactions or speculative conclusions. To understand this issue, it is essential to recognize how the modern international financial system operates. Iraq's economy is heavily dependent on oil exports, and oil is primarily traded in US dollars across global markets. Every day, millions of dollars generated from Iraqi crude oil sales move through internationally recognized financial channels before becoming part of Iraq's foreign currency reserves. These reserves play a vital role in supporting the country's financial stability. They are used to maintain confidence in the banking system, finance imports, stabilize the exchange rate when necessary, and reassure international investors that Iraq has sufficient financial resources to meet its obligations. Holding reserves in internationally trusted institutions has become a common practice for many countries because it provides security, liquidity, and global credibility. Therefore, while the article presents the arrangement as a symbol of monetary dependence, it is also important to recognize that reserve management follows internationally accepted financial principles rather than purely political considerations. The debate becomes even more interesting when discussing the concept of monetary sovereignty. Many Iraqi economists argue that a country with Iraq's vast natural wealth should eventually develop stronger domestic financial institutions capable of managing a larger share of its own financial operations. This argument is not simply about where reserves are stored, but about building an independent and modern banking system that earns the confidence of both Iraqi citizens and international financial markets. After decades of wars, sanctions, political instability, and economic reconstruction, Iraq has spent years rebuilding institutions that were severely weakened. Establishing strong commercial banks, improving regulatory oversight, strengthening anti-money laundering compliance, modernizing payment systems, and increasing financial transparency are all part of this long-term rebuilding process. These reforms may not receive as much public attention as exchange rate rumors, but they are arguably far more important because they create the institutional framework required for sustainable economic growth. For followers of the Iraqi dinar, one of the most important lessons from this discussion is understanding that currency strength is built upon economic fundamentals rather than speculation. Many people naturally focus on rumors regarding exchange rate adjustments or potential changes in monetary policy, but central banks generally prioritize stability over sudden movements. The Central Bank of Iraq has consistently stated that its primary objective is maintaining monetary stability, controlling inflation, preserving purchasing power, and ensuring confidence in the national currency. These objectives require careful planning and gradual implementation of reforms rather than abrupt policy changes. Any significant adjustments to monetary policy would likely be influenced by a combination of economic growth, fiscal discipline, reserve adequacy, banking sector resilience, inflation trends, and broader macroeconomic conditions, rather than a single political event or headline. Another important dimension of this debate involves public confidence in Iraq's domestic banking system. For many years, a considerable amount of cash has remained outside the formal banking sector. When individuals and businesses prefer holding physical cash instead of using regulated financial institutions, banks have fewer deposits available to support lending, investment, and economic expansion. This limits financial intermediation and reduces the effectiveness of monetary policy. Encouraging greater participation in the banking system through digital payments, electronic banking services, financial inclusion initiatives, and modern payment infrastructure can significantly strengthen the economy over time. Increased trust in banks also supports greater transparency, improves tax collection, reduces informal economic activity, and creates conditions that allow businesses to access financing more efficiently. These developments may appear technical, but they directly influence the overall health of the financial system and ultimately contribute to confidence in the national currency. The article also indirectly highlights Iraq's continuing effort to reduce excessive dependence on oil revenues. Although oil remains the backbone of the national economy, policymakers increasingly recognize the importance of diversification. Building stronger industries in agriculture, manufacturing, logistics, technology, renewable energy, tourism, and private enterprise can create additional sources of national income, while reducing vulnerability to fluctuations in global oil prices. Economic diversification strengthens government revenues, creates employment opportunities, expands exports, and improves long-term fiscal sustainability. Countries with diversified economies generally possess greater resilience during periods of external economic uncertainty, making their currencies more stable over time. For Iraq, successful diversification would represent not only an economic achievement but also an important step towards strengthening overall monetary independence. International cooperation also remains an important part of Iraq's financial future. Working with global institutions, improving compliance with international banking standards, and strengthening relationships with major financial partners do not necessarily reduce national sovereignty. Instead, these efforts often improve access to global investment, facilitate international trade, lower financing costs, and increase confidence among foreign investors. Many of the world's strongest economies actively participate in international financial systems, while maintaining full control over their domestic monetary policies. Therefore, Iraq's challenge is not choosing between complete independence and international cooperation, but finding the right balance between strengthening domestic institutions and remaining fully integrated into the global financial system. Looking ahead, the long-term outlook for the Iraqi economy will likely depend on the continued implementation of structural reforms rather than short-term speculation. Modernizing the banking sector, expanding electronic payment systems, strengthening regulatory institutions, improving governance, attracting productive foreign investment, encouraging private sector development, and maintaining fiscal discipline are all essential components of sustainable economic progress. Each successful reform increases confidence among businesses, investors, financial institutions, and international markets. Greater confidence can contribute to stronger economic growth, increased investment, improved employment opportunities, and enhanced financial stability. While these developments may not produce immediate changes in the exchange rate, they establish the economic conditions necessary for long-term resilience and credibility. For Iraqi Dinar followers, today's discussion serves as an important reminder that meaningful economic transformation is typically a gradual process. Headlines often focus on dramatic predictions or speculative claims, but real progress usually comes through consistent policy implementation, institutional strengthening, and responsible economic management. Every improvement in banking regulation, financial transparency, payment modernization, investment climate, and governance represents another building block in Iraq's long-term economic development. Rather than focusing exclusively on rumors or expectations surrounding the currency, it is equally important to monitor the broader reforms shaping Iraq's financial future. These reforms provide valuable insight into the country's long-term direction and demonstrate how economic stability is achieved through sustained institutional progress rather than isolated events. As Iraq continues modernizing its financial sector and expanding its role in the global economy, discussions about monetary sovereignty, reserve management, and banking reform will likely remain central topics for policymakers and investors alike. The relationship between Iraq's oil wealth, foreign reserves, domestic banking capacity, and international financial partnerships will continue evolving as reforms progress. Ultimately, the success of these reforms will be measured not only by economic statistics, but also by stronger public confidence, improved investment conditions, greater financial inclusion, and a more resilient economy capable of supporting future generations. Thank you for watching today's analysis. If you appreciate responsible, factual and balanced Iraqi dinar coverage, make sure to subscribe to the channel and like the video for more updates. As always, this content is provided for informational and educational purposes only, and should not be considered financial or investment advice.